All right. Well, how you doing this morning, Spencer?
I'm good.
Thanks.
Henry. How about yourself?
Great, great. Thanks for doing this for me, so I can have this first-time homebuyer presentation for on my Facebook and website, so my buyers can have some information on what's available there in first-time homebuyers. So, why don't you
You're
go
welcome.
ahead and go through your presentation, and if I have any questions, I'll ask you as you're going along.
Okay, sounds good. Well, thanks for having me, Henry, and hopefully this will just provide a little insight into what the home buying process looks like, specifically from a lending standpoint. So we'll get started here. So when you are buying a house, it's a very exciting time. There's lots of emotions going on, a lot of visions of what the future is going to look like when you move into the house. But at the same time, there can be a lot of stress with, there's a lot of documentation. So as we're asking for that, you're trying to find it, is it in this filing cabinet? Is it on the computer? Where's it at? I can't find it. So it can get quite stressful. But what I do is I help you, I walk alongside you step by step through the mortgage process to explain what documents are, why we need them, and answer any questions that you may have. And the benefit of me doing that is I'm available. You can get a hold of me real easy. And that's just going to make the process speed up. The quicker you can get in touch with me, the quicker you can get me documents, the faster we're going to get to closing. And everybody's going to be happy when we can close early on your loan.
I think that's great. I think that does take the stress out. Managing, people's expectations and letting them know ahead of time. And that's what I try to do when working with my customers, to let them know that the information that the mortgage company will be requiring. Because a lot of people do get frustrated with that amount of paperwork that they have to submit.
That's right. And we do, or I do my best. We have a great team. We do our best to get all the documentation we need up front. But sometimes when we receive that documentation, there's things on there that we either didn't know or was unexpected. And sometimes we have to ask for follow-up documentation. So we try not to, but sometimes it can get frustrating when things come to us that we don't know about and we have to ask for more explanation. But that's why we're here, to make that process a lot smoother. Um, so a few things I want to hit on while we're talking today. Just what are the benefits of homeownership? How do you prepare yourself for your loan application? We'll touch briefly on different loan product types. There's a lot of details in those, but we're just going to talk briefly on what the four main categories are. So what are some of the benefits of home ownership? Well, one, if you're currently renting, you're paying somebody else's mortgage. When you buy your own home, a mortgage is almost like a forced savings. As you're paying that monthly payment, you're building equity in your property. So whenever you go to sell it, you're going to have a built-in savings right there instead of paying for somebody else's mortgage. I'm not a CPA, but you can claim some deductions on your income taxes to help reduce your tax liability as well. And a couple other things: the longer you own your home, as long as the market in our area is appreciating, which I foresee happening for quite some time in this area, you're gaining more value the longer you live in it. So not only are you paying your balance down, but the appreciation is going up. So you're in essence building equity on both ends. And then if you remodel a bathroom, remodel a kitchen, add on different things like that, is going to add value to your house as well.
That's a great on the tax advantage of that. What a lot of people don't realize is that the investment that you're making in your home, when you get to retirement age and you sell your home, you have a one-time exemption of $250,000 per person. So that, with a couple, that's a $500,000 tax-free exemption they have when they go sell their home, if they're going to scale down to something smaller and put the rest of that money into a retirement account.
That's exactly right. You're exactly right. And the other thing, when you're renting, I mean, if you wanted to knock a wall out, you can't do that. If you paint a wall, you're going to have to go back and repaint it when you move out. So there's a lot of things you can't do when you're renting that you have the freedom to do when you own your own home.
Right.
So what do you need to know whenever you begin the process of thinking, hey, I want to buy a house? Well, first and foremost, if you go to Henry first and say, hey, Henry, I like this house, can we go look at it? Henry's going to redirect you to me and say, you need to go see Spencer to get a pre-qualification. what that's going to do is going to allow Henry to focus in on what you can afford and narrow down his search to where it's quicker, it's more efficient, and he's showing you things that you like and you can afford. So begin to think, how much do I want to spend? Come to me, tell me, we'll go through a quick application. There's no cost to do this. It takes 10 minutes maybe to fill out the application. I'm going to ask you questions about how much are you paying currently? How much are you comfortable paying? How long are you going to live in this home? And then go over a few things that you may not think about when it comes to owning a home, other expenses such as, are you going to mow your own yard? Are you going to hire somebody to do it? What about my cable bill, my internet bill, homeowner's insurance, and things like that you might not be used to doing from a renting aspect. So there's some extra costs that come in just I'll let you know about so you're not caught off guard when those bills start rolling in. So a couple of do's, we'll do a couple of do's and don'ts here. So some things that you should do. A lot of the forms that we need now, they probably do come to you in the mail, but the majority of them are available online. Things like your bank statements. Most companies do payroll online where you can go in and get your pay stubs. Keep all these originals if you have them, especially if you're in the beginning stages of buying a house. W-2s, tax returns, start gathering those. If you don't have a down payment, but you have a close relative that says, hey, I want to help you buy your house, and they're going to give you some money, let us know up front. That's perfectly acceptable. We just need to go through the right process to get that documentation done that's in an approved manner. Do not open any new credit. We will, a day or two before closing, we will do a credit refresh to make sure that you've not spent any money that you haven't told us about. So people have gone out and bought a car a couple of days before closing, and it's knocked them out of qualifying. Some of the don'ts. Oh, I guess that was a don't. Don't go out and open any new credit. If you have cash sitting at home in a piggy bank under the mattress, wherever it's at, don't deposit it into your bank account. The underwriters are going to look for patterns of deposits, and anything that's not payroll related that are large deposits, we're going to ask you to show us where those funds came from. If you change jobs or considering changing jobs, please let us know as soon as possible. That will delay the process and could even knock you out of qualification if you change jobs during the mortgage process. Don't make any major purchases. I know you see this house that you've got big dreams and ideas of what furniture you're going to have in it, what appliances you want. Do not go buy those beforehand. That could throw off your debt to income ratio and again, knock you out of qualifying. So those are the few things that we typically see happen that cause delays and issues. So getting pre-qualified, we'll touch on this real quick. Like I said, it's a real simple process. It's an application I can send you through your mobile phone. I can send you to my website. We can do it over the phone, whatever's most convenient for you. But it takes about 10 minutes to complete. And what that's going to do, one, it's going to allow me to check your credit report to make sure your score is at a qualifying level. If it's not, I'll walk you through steps to get it to where it needs to be. And if it's a more complicated case, we have a great credit specialist that we partner with that can help get us a plan of action over the next several months to get that score where it needs to be. So on that note, if you don't know where your credit is, let's apply and we'll look at it. If you think it's bad, sometimes it could be better. So there's no obligation when you apply. It's totally free. And I'll take a look at it and tell you where we can go from there. The other thing about pre-qualification. So once you come to me, I'll give you and Henry a pre-qualification letter. That will allow Henry to show you the right houses. And when you're ready to make an offer, it shows the seller that, okay, this buyer's done their due diligence. They've been to a lender. They're pre-qualified. This is a good offer. So it helps them realize that there's some security in the offer that they've been given. So anytime you're ready to look for a house, start with me, and then I'll get you back in touch with Henry. Or if you call Henry, he's just going to send you back to me. A couple of things about the home buying process, real briefly, a couple of different steps. So you get pre-qualified first. Then, like I said, I'll send you to Henry, say, hey, Henry, they're approved for $250,000. He's going to go show you houses. You're going to find one. Henry's going to help you negotiate an offer, whether that's a full offer, a reduced offer, an offer above asking price. And then he'll throw in things like closing costs. Will a seller pay any of those? So Henry is really good about negotiating the aspects that we might need from a lending side of the process. So once you get an accepted offer, you put an earnest money deposit down. That goes to the title company. They'll hold it until closing day. And that's just basically a good faith estimate to the seller saying, I'm really serious about buying this house. So once we get the contract in, we get all the documentation in from you, the buyer, we go to underwriting. They're kind of the final say-so, stamp of approval, make sure all of our I's are dotted, T's are crossed, we're compliant with all the guidelines. That's what they do. Once we got the approval, we're going to send you out a loan estimate, and then shortly thereafter, a closing disclosure. Those two forms go over all of the charges related to the mortgage process. And then let me back up one little step. After the offer is accepted, you will probably do a home inspection. What that's going to do is, it's more for your benefit. The lender doesn't see it. It will uncover some things that could be wrong with the house. So that gives you some more negotiating power with Henry and the sellers to get a few things fixed prior to purchasing the house. So once we get the underwriting finished, we get our final approval. That closing disclosure will go out to you 3 business days prior to closing for you to sign, so you can see your final numbers. The day of closing, you'll bring your, if you have a down payment, you'll bring that with you. You can either do a cashier's check or a wire, depending on what you're comfortable with and what the title company requires. And then we close, you get a couple of cramps in your hand from signing your name so many times. And then shortly thereafter, 30 minutes to an hour, depending on how busy it is and what part of the day it is, we'll get our funding. And that's the last step of approval. The funding comes from us to the title company. Title will disperse all the funds to everybody. That's when you get your keys to your new house. So that's kind of the process briefly of how applying for a mortgage works. So loan programs, I'm going to touch on three to four big ones. We do have fixed rates. Occasionally we'll do an adjustable rate. They're just not that common. They're typically more sophisticated buyers will look at that. But conventional mortgages, that's going to be your standard type mortgage that's not backed by the government. The 2 big investors there are Fannie Mae and Freddie Mac. That's typically a minimum 5% down for a conventional. FHA is probably the most popular loan that we do. It's the least strict as far as credit requirements goes. They do have lower interest rates and a low down payment. It's 3.5% of the purchase price. And FHA and VA are both backed by the government. So VA loans obviously are for veterans, can be 100% financing. Again, you get low rates there, no mortgage insurance, which is huge. Typically, if you do not put at least 20% down, all loans will require mortgage insurance. And that's basically to insure the lender in the event that there's a foreclosure, that the lender will not lose any money. So that is required. And there's different ways to handle that. So I could talk to you about that as well. And lastly, first-time homebuyer programs. If you don't have money down, don't worry. There are programs available out there that are either a grant or a second lien. So a grant does not have to be repaid, but a second lien does. But depending on your situation and your income and your credit score, I'll find the right first-time homebuyer program for you. When we do that and we ask the seller to pay some closing costs, typically you can get in the home for a few $100. So it makes it affordable for pretty much everybody. And lastly, here's my contact information. If you need to get in touch with me, I'd be glad to talk to you about any questions you may have about the home buying process, even talk to you about what your credit may look like or steps to prepare yourself for purchasing a home in the near future. So Henry, I hope that was
that was great, Spencer. You did a great job. The two products at the end on no down payment are the SETH programs,
okay,
right? And the USDA, right?
Yeah, so USDA, I'll touch real briefly on those. USDA is a no money down program. Those are for more rural properties, so outside the city typically. So those are property specific. As to where SETH, you can buy pretty much anywhere in the state of Texas. Travis County is not one of the areas, but pretty much anywhere else that we would do locally. But SETH is a grant, so technically it would be an FHA loan or a conventional loan with a down payment, but the grant will cover that down payment for you. And those, typically the first-time homebuyer programs do have income limits based on county. So,
but the USDA and the SETH are not first-time homebuyer programs. You don't have to be a first-time homebuyer.
That's correct. Yes. There are some regulations about owning a house or having two mortgages at once, but no, it does not have a first-time homebuyer requirement.
Another thing, as far as the definition of a first-time homebuyer, is somebody that has not owned a home within the last 3 years. Is that correct?
That's right. You cannot have your name on title to a property within the previous 3 years. If you have, then you're technically not a first-time home buyer, and then we'll look at avenues for that as well.
Right. Well, thanks for your time today, Spencer. I know this is going to be really beneficial to anybody that goes to my website or my business page on my Facebook to find out about first-time home buyer. I hope we can do it again.
Certainly.
I think our time might have ran out. I hope we can do it again, and we talk about maybe the SETH program more in depth and also the USDA more in depth. But have a great day and look forward to seeing you around the office. Thanks a lot.
All right. Thanks, Henry.